Well, good morning, folks, and welcome to the Danielcode. Today I'm going to show you just one of the features of the Danielcode, and this is called the trade program. I guess you could say this is the heart and soul of the trading part of the program, which is what most of you I know will be interested in. So you can find the Danielcode at our website, www.thedanielcode.com, and this will just give you a brief introduction today to our webinar, which is going to take you into some of this material at greater length and show you how you can profit and benefit from the Danielcode, and we'll just move on without much more ado. Primarily for the purpose of our trading program, the Danielcode is a 1 to 10 day trading system in futures and forex. We trade all the major US equity indices, gold, silver, oil and tea, bonds, grains, and 15 forex pairs. So in amongst those 34 or 35 markets, we create daily signals. Sometimes there are quite a lot of them, sometimes there are not so many. You can figure on averaging about six or maybe 7 signals a day, about half of which, a little more than half, about 55%, 58%, let's say, get elected, which has a very specific meaning for Danielcode traders. The screen you're seeing now is the Danielcode trade program. There's some interesting stuff there which we're going to go into in greater length, but I just wanted to show you that to give you some idea of what it's going to look like. The Danielcode is unique so far as I know, and I've been doing this for a very long time, in that it is based on fractals of time cycles, and they're not time cycles that you've ever heard of before unless you've read my published articles. But the Danielcode gives us some unique time cycles, and these ones I'm showing you here on this is a 6-day timing chart that we use for other purposes, but it will make the point to you that time and price are actually the same thing on different axes. That's quite a revolutionary thought, but you'll see that it does create the results, and there's been quite a lot of material written and published by me on that. I'm going to take, just as our little example today, gold, because I know a lot of you guys are interested in gold either as investors or as traders, and gold's number is 44. There are reasons for that, which I can explain to you on another day, but we go from those major cycles which you just saw on the 6-day charts down to the daily chart, and by taking the fractals of those time cycles and converting them to price, we get very specific buy and sell signals. And this is a chart of COMEX gold from late September last year up to towards the end of January this year, and you can see every signal that was created by the Danielcode trade program just in that one market. And bear in mind we have 30 odd other markets that we also create signals in, but as you can see there, the Danielcode trade program doesn't miss many trading opportunities. I know that all the proof of the pudding's in the eating, so we'll get straight to the results. These have been compiled independently for the last 12 months under review. We had 857 winning trades. It's a lot of trades, isn't it? And that was an 86% win rate. We do have some losers. In fact, 14% of our trades are losers. And you can see that in the bottom paragraph there, we had a live trade room running for 7 months last year, and it started with a $100,000 account, a SIM account, on June 27th, and closed out the year at 151,000. And that was all done in real time in front of a fairly large number of our members. So there are plenty of people who can say, I was there, I saw it. It happened just the way that Needham says it did. And you can see that over the 6-month period we returned an average of 7.29% a month. And that was on a maximum 2% correlated risk. The Sharpe ratio, for those of you that are into statistics, was 4.55 at the end of that trial period. Our worst month, you can't really talk about these trade programs realistically without indicating what your drawdowns were. October was a horror month for us with endless number of outside bars which we deal with, but they're certainly unusual for them to be profitable. And that was our worst month in the last 12 months, and we had a loss of about $58 on a $122,000 account in that month. So let me take you straight away now, if I may, to the Danielcode charts. This is a Trade Navigator chart. This is the charting software that we use. It's very, very good for Forex. Others are probably just as good for futures. And just want to show you one simple example of a recent trade. This was a Danielcode trade program buy today, Wednesday, and you can see that this particular signal just took off and kept going, and we exited at the close. Not all trade signals are the same. Some of them are reversals and require a much tighter stop-loss protocol. Others are continuations, and for those we give them a lot more time to develop, and I will explain to you what are the different protocols with each of these trades. This is now the Danielcode website that we're looking at, where all the goodies are parked, and the main one we're going to look at today is the Danielcode trading program. You can see in here we have a great number of articles, videos, PowerPoints, trading reports going back some time, a trading manual, lots of other features as well. This is the one we want to look at today. This is the Danielcode trade program, and this is what it looks like. The important point is that this will open up for you every day, just like this, and the signals are created and loaded into the website about 2.5 to 3 hours after the 2.5 to 3 hours after US markets close. And then that will light up these yellow boxes. I've got the red highlighter over them now. They will go yellow to indicate that the new signals have been posted. And all you do then is you go to this heading here, account value, and you type in there the size of your account, or your SIM account, whichever you use, and then you put in the amount that you want to risk on each individual correlated trade. Now that's not the same as overall risk. This is a risk for each of the correlated markets. So we put in here our risk value, 1 or 2%. We recommend that you not trade more than 2%. It doesn't sound a lot, but as I'll explain to you, it can become quite a lot when you have a large number of trades elected. And then we then just click this button, calculate contracts at defined risk, and it opens up and it gives us a recommendation of the number of contracts we should be taking. And you'll see over here that we have our markets where the signals are for the day. We have the codes of those markets, and then they're Trade Navigator codes. We can give you other codes if you're using other charting software. And then we tell you whether the signal for today is a buy or a sell. We tell you the specific entry price, the specific place to place your first stop loss. That'll be your stop on entry. We give you a first target, which is a number at which we're going to do something on reversal trades, but not on other trades. And most importantly, we tell you whether these markets are correlated with each other or not. And you can see here you've got an Aussie USD, and further down here you've got a GBP USD. Those markets are correlated. If those trades are elected, odds are that they will either be both winners or both losers, which means you don't want to have any more on the combined trade than you have set up in your risk parameter. And the Trade Navigator does all of the math for you. From there, it's a simple exercise to type in the number of contracts you want to take, somewhere close to what the program recommends. Let's just take a few, and we can see that let's spread it over the futures and the Forex, and we press the calculate total value sold, and the trade program comes up and it tells us our total risk value in dollars. You can see on this first trade, the Aussie USD, your initial risk on entry is $296, and so on for the trades you've indicated you're taking. and it also tells you your total risk percent. Now, trading is very much about risk management. If you can get this part right and have an 86% selection bias in your favor, you're on your way. So I hope that shows you a little bit about what the trade program does, and I will look forward very much to greeting you and telling you a lot more about this at our webinar on next Wednesday, the 15th of February.